Filing income tax in India can feel like navigating a maze, especially with the introduction of the new tax regime. Let's break it down. First, the new tax regime offers lower tax rates, but with a catch. You have to forego most deductions and exemptions. This means if you're someone who enjoys claiming deductions for things like home loan interest or medical expenses, you might want to think twice before jumping into this new system. Under the new regime, the tax slabs are simplified. For income up to 2.5 lakhs, there's no tax. From 2.5 to 5 lakhs, you pay just 5%. Then, from 5 to 7.5 lakhs, it's 10%. And it continues to rise incrementally, reaching 30% for income above 15 lakhs. This structure is designed to make tax filing easier, but it can also lead to confusion if you're used to the old ways. Now, let's talk about the filing process itself. You'll need to gather all your financial documents, including your Form 16, which your employer provides. This form summarizes your salary and the tax deducted at source. If you have other income sources like freelance work or investments, you'll need to include those too. When you sit down to file, you can choose between the old and new regimes. This decision is crucial. If you opt for the new regime, you'll have to calculate your taxable income without the usual deductions. But if you stick with the old regime, you can claim deductions under sections like 80C, which covers investments in things like life insurance or public provident fund. One of the biggest advantages of the new regime is its transparency. The tax rates are straightforward, and you can easily calculate your tax liability without getting lost in a sea of exemptions. However, it's essential to evaluate your financial situation carefully. If you have significant deductions, the old regime might still be the better option for you. Once you've made your choice, you can file your return online through the Income Tax Department's website. The process is user-friendly, and you can even e-verify your return using methods like Aadhaar, OTP, or net banking. Remember, the deadline for filing is usually July 31st of the assessment year, but it's wise to file early to avoid the last-minute rush. And don't forget to keep a copy of your return and all supporting documents for your records. In conclusion, whether you choose the new tax regime or stick with the old one, the key is to understand your financial landscape. Take your time, do your calculations, and make an informed choice.